Hey Bart, I was wondering what the maximum amount you should cash at the cages before needing to fill out any paperwork or IRS forms. I've filled out forms twice in the past not knowing exactly what it was. This was at Twin Rivers in Rhode Island. Do you know if it varies from casino to casino or state by state? I currently play at the Encore in Boston, and I can't even buy big chips without giving my ID or player's card. I'm also concerned that they track your win-loss in poker. Therefore, I try to buy chips with all the money I bring and sell some back at the table, player to player, so wins are less traceable. Do you think any of this is necessary or should it be a concern? Of course, the first thing that I should say is you are absolutely, by law, supposed to be claiming, your poker winnings. We always giggle about that. And I'll just say this as a caveat before I answer your question. And I do truly believe this. If people actually took a step back and thought about the amount of time that they spend trying to avoid somehow like these wins and stuff being on the grid and realize that they could take money that they win from poker being on the grid and investing it, maybe not this year, and paying taxes on it like they're supposed to be, and then compounding that on the grid money, you will end up ahead by having the money on the grid. Now, you could give me certain examples where that might not be the case, but, I remember playing with this kid like in the late 2000s at Commerce where he won a lot. He was like a big, big winner. He doesn't play that much anymore. He was so concerned with like not claiming taxes and keeping the money off the grid that he had like a pile of cash and he couldn't do anything with it. He bought like gold coins. And this was before 2008. He probably lost out on like 2x compounding returns in the S&P 500 between like 2003 to like 2008 because he couldn't put that money into a brokerage account because he wanted to keep it off the grid. So the time that you take trying to keep the money off the grid, you're probably going to end up ahead. But let's answer this question though. So for the most part about forms and things like that, and I'll address maybe why Encore does it like this. So the form that gets sent to the IRS, it's not a form, it's actually digital. When they take your social security number down, now they might take your social security number down for other types of things too, but mainly it's for what is called a CTR, which is a currency transaction report. Now that is anytime you have any type of transaction in cash of over $10,000. So if you went in and bought chips with over $10,000, or if you cashed out with over $10,000 in cash, I'm not talking about taking chips out. I'm talking about taking paper cash out. You get a CTR. You get a CTR for anything that you do. If you go to a car dealership and buy a car with cash, you're going to get a CTR. Any type of transaction, you are supposed to get a CTR. If you go to the bank and deposit $15,000 in cash, you're going to get a CTR. You don't actually get a CTR. It's just something that's sent out digitally. It's really not that big of a deal, and it's still a fairly normal part of day-to-day business, especially at a bank. $10,000 is not that much. Now, so where you get into trouble, though, is when you structure. Now, what is structuring? Structuring is when you are intentionally trying to get around this by going to cage A and cashing out $7,000 and then going to the other side of the casino and going to cage B and cashing out $5,000 to try to skate the rule in a 24-hour period. That's what's called structuring. If anybody wants to know how you get busted for structuring, look at, I think it's Elliot Spitzer, the governor in New York. This was 10, 15 years ago, who got busted for going to escorts. But the reason why they busted him and the reason why it was a scandal was because he was structuring his ATM withdrawals, where he was taking out like $7,000 and then $4,000. That's how they got him. And then they found out about the hookers, and then it ended his political career. So a structuring report against you, although it's rare, is not something you want to have against you. And my understanding from my accountant is it's always investigated. CTRs are sort of normal part of business. Now, why is it then when you go to these casinos, they ask for your ID when you're nowhere close to $10,000? It is so that you can't structure in the casino, meaning that they are obviously taking your picture and asking for your ID. They are trying to prevent you from cashing out at this cage for $4,000 and then go cashing out at the other cage for $8,000. That's the whole purpose of why they do that. And they even do that in California casinos too. That's the only reason. It is absolutely for internal reasons. If they are taking your ID for less than $10,000, it is for internal reasons. I would not worry about them keeping track of like your poker wins and losses. Okay. It's only for internal reasons why they are doing that. Now, it could be also too specifically at the Encore that they have standardized protocols across all of their properties, meaning that we all know that the rules are a lot more stringent in, say, Nevada than they are in California. In Nevada, if you go to a casino and you try to cash out a $5,000 flag, they're not going to cash it out unless you have a history there. It's the Wild West in California unless they've changed it. You don't have to have a history. I could give somebody a $5,000 chip and you can just go cash it out. They're not going to ask you where you get it from. The exact opposite in Nevada. The thing with the Encore is it might be a little bit more stringent because their policies and procedures are written based upon their Las Vegas properties. So it might be standardized across all the properties. So I don't know exactly in Massachusetts what the sort of standard is. There aren't many casinos here. But it could seem tough because they are using their procedure that was put in place in Nevada from Encore. That's me speculating that. But to sort of give you a simple roundabout answer, you do not need to worry about the casinos keeping an internal record of you cashing out if you're really that concerned. There are many more important things that you need to worry about. Now, with that being said, if you don't want to deal, and I've always said this too in my safety podcasts and things like that, if you don't want to deal with cash and you're a regular player, why can't you just cash out chips? Let's say that you got 15,000 in chips, you could just color up. That's not going to trigger a CTR. And get 3 5K chips. The CTRs are only for cash transactions. Now, when I go to Hustler, like I said, I wired a bunch of money in there. When I'm done, I'm going to deposit that money back in my player's bank and I'm going to wire it back. That's another thing that's not going to trigger a CTR. Most of these card rooms and casinos will have electronic players' banks, which I encourage people to use, which means that it's like a little bank that you have. It's kind of the equivalent of a box, but they have a record of it. Meaning, I've got 15,000 in chips. I can just go deposit it into my account, and then the next time I go back to the casino, I can take it out. By the way, if I deposit it in chips and I withdraw it in chips, there's never a CTR that's going to be triggered. Nothing's going to the IRS. You're never the IRS is only the CTR is only the paper, but it's not like even if a CTR goes to the IRS that it means anything either. You know, how understaffed the IRS is. I know they're adding a bunch of people on it. I've never heard of a situation where someone was audited because of a CTR or they were even necessarily questioned. Usually it happens because somebody is being investigated for something else. $10,000 in paper cash is not that much. And you're not doing anything wrong by playing poker. So it's not something that you really have to worry about all that much. Even if you were a professional poker player, well, if you're a professional poker player, you file as a professional like I do, you probably want the CTRs because normally you get hassled from the IRS because it's to your advantage to file professionally because you can take business deductions. So I saw somebody in the live chat say, well, if I'm only claiming $6,000 or $7,000 a month, if you're a professional poker player and you're claiming that, the fact that you might have dozens of CTRs for the year just proves that you're doing it for your profession. So a lot of people get petrified over these things, but for the most part, all of those types of things where the casinos are taking your identification for any types of transactions that are less than that $10,000 paper threshold, they're for internal protocols so that you don't structure at their other cages. So I would give you a short answer to wrap it up. Just don't worry about it. And by the way, all money that you make is taxable. Sinistragius in the live chat says, pretty sure a 50,000 transfer triggers the 10K reporting. No, it doesn't. What 10K reporting does it trigger? A CTR is for paper money. Now, does it? Now, if I got audited, could the IRS look and say, "Oh, I see a wire in your bank account. Sure. It's not triggering a CTR. A TTR is for paper money. That's what the rule is. Brandon G says, what tax write-offs can you make if you file as a pro? You can make a lot of tax. Well, you can make business deductions, right? It's like you're running your own business. Now, remember, though, you have to pay self-employment tax, which is an extra 15.3% on like the first 150,000 and then 2.9% on top of that. So it's not like, oh, I'm going to file as a professional. It's always going to be a great deal. You have to pay extra tax because you're not paying the FICA tax that your employer is if you're, a wage earner. By the way, I'm not an accountant, but I do know a fair amount about this. I think in another life I would, or if I decide to quit poker for some reason, I might go into, you don't have to be a CPA either. You can be an enrolled agent, but I do know a fair amount about this and also gambling taxation. But if you are a professional poker player, you can write off your travel if it's for business. You can also take a mileage deduction for this is an interesting one that's very intricate. I've had this discussion. I've read articles on it. As long as you play in more than one casino in a year in your location, like around your location, you can write off the mileage and take a mileage deduction for the travel to and from a casino, even if it's locally, as long as you play at more than one. And I don't know what the mileage deduction is. They adjust it. It's probably quite high. I don't know if it's up to 80 or 90 cents a mile. So let's say that you commuted 10,000 miles to the casinos and you file as a professional for the year. And let's just say that the mileage deduction is $1, just to make it even. And all those that 10,000 miles was all for business. You get to deduct $10,000. It's like a $10,000 business expense. That's how that works. Now, if half of it's for business, you deduct half. And when you're on the road, like if you go to the World Series and you file as a professional, you get to take a meals deduction too. You can use actual receipts or you can use I think it's a daily amount that's set by the IRS depending on where you are by city. Slightly, like for example, in New York City, if I'm in business in New York, it's higher than in Las Vegas. Something like that. So, but I would say, and Kelly Baker says, get an accountant. I'm one and I still don't know everything. Get a real pro. Yeah, I agree with you, Kelly Baker. But what I will say is if you are serious about where your return is not going to be easy, or if you're considering filing as a professional or you're filing as a professional and you have any types of quirks, don't just go to any accountant. Okay? That I think that you can don't take away from this. Don't just say, "Oh, I'm going to go to a CPA." Find out if the CPA has any experience filing a professional gambling return. Because there are many different nuances that accountants specialize depending on your field. Like if I drilled for oil, the whole tax code is entirely different when you drill apparently for like minerals, or you deal with like offshore, like offshore banking or something like that. It's entirely different. You wouldn't go to a real estate attorney if you got caught up in some sort of criminal matter, right? You wouldn't go to a divorce attorney. So if you're thinking about filing as a professional, I would highly recommend, get an accountant, but go to an accountant that has experience in gambling. Now, I go to Russ Fox. I've always talked about that. He tells me that he probably does, I think he said maybe 15 to 20% of all of the professional gambling returns that are filed in this country. That might be, he told me that like 5-10 years ago, that he might file far lower than that now as DFS and sports gambling starts to proliferate around the country, because there might be more people that are filing as professional gamblers. But he does a lot of them, that's for sure, and he knows the rules inside and out. So you can always shoot me an email, bart@crushlivepoker.com, if you ever want his info. And I don't get anything for that. I'm just saying I've been with him for many, many years. So I also have like many past podcasts on gambling taxation over on Crush Live Poker. If you go to the site and just do a search on taxation in the robust search tool that we have at the top right, all that stuff will come up. I'm looking to see if there's any other interesting questions here. It's not really a tax thing. I've done tax things before. I'm just saying don't worry about these internal protocols. So I always wondered if you can deduct your poker losses. Well, Derek Norman, if you are like 99.9% of the population and you are not a gambling professional, the way that you are supposed to file your taxes if you are gambling is you are supposed to file all of your wins. Let's say you play poker 30 times in a year. And let's say that you've got, maybe you're not playing super high stakes. So you have winning sessions and losing sessions by day. Okay. Let's say you win, say 20 times. And each time that you win, it's $1,000. And then there's 10 times that you lose. And each time that you lose is $1,000, right? So you've won 20 and you've lost 10. You can't just say, I won 10. That's not how you file if you're a non-professional. You have to put on your tax return that you have won $20,000 as gambling winnings. And then you have to itemize your deductions and deduct $10,000 in gambling losses from your wins. This is why a lot of times when the 2018 Republican Tax Cuts and Jobs Act, when they raise the standard deduction like they did, it's actually bad for the recreational gambler. The reason why that is because you could be a recreational gambler, be a winner, have some gambling losses, but the standard deduction is actually higher than the amount that your gambling losses would be. So you would want to take the standard deduction, say it's like $13,000. If you only have $10,000 in gambling losses, you have to itemize in order to take your gambling losses. So the standard deduction would be higher. So it actually hurts you in the sense that in that scenario, you're not 20,000, 10,000. You're not deducting the 10,000 from your losses because the standard deduction is higher. Now, if you file as a professional, you net. You don't have to do that. You net. But most people don't file as a professional.